You got me running, got me running. Take it, take it, take it, take it. Raise your hands up. Raise them up.
All right, good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call, episode 319. It's the 24th of June, 11 a.m. right here in Singapore, GMT +8. All right, so this currency call, you will get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial as we'll be going through what could move prices, possible trade ideas, and also highlighting potential targets and risks. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. All right, so today, later on today at 7 p.m. GMT +8, UK will be releasing their monetary policy decision. So what to look out for? Is it advisable to trade that particular news event? I'm going to get Kim Hong here, currency analyst at LCMS Traders, to share on that. Kim Hong.
All right, thank you, Junwei. That's right, the Bank of England will be meeting later on, okay? So in their previous meeting back in 1st of May, okay, they actually slowed assets purchase, okay? They held interest rate unchanged at 0.1%, and they actually slowed assets purchase from 4.4 billion pounds per week, okay, to 3.4 billion pounds per week between May and August. So you guys may be wondering, like, what's with the whole slowing of assets purchase? You know, is that considered a tapering? Well, it's not a cut in quantitative easing, but it's a slowing down of assets purchase. Okay, now let me give you a simple example. Now, suppose COVID hits and a central bank says that we are going to be purchasing $12 billion worth of assets, okay, bonds or government bonds across 1 year, okay, which is 12 months. Now, the average rate of purchase will be $1 billion per month. Okay, now 6 months into the assets purchase program, okay, the central bankers may say, like, we have seen the pandemic being contained well, and the economy is opening up, and the country's economy is doing well. Therefore, we decide to slow down asset purchase from, let's say, 1 billion pounds to just 800 million pounds, maybe. Okay, so what does this mean? Okay, this means that by the end of the whole 1 year, okay, of the program, the central bank will actually be purchasing less than the initially set out amount of purchase of 12 billion, right? Okay, so is this actually a good thing or a bad thing? I would say it's a good thing. Okay, initially planned to purchase $12 billion worth of bonds and things like that, but right now they are only purchasing less. Okay, remember, bonds purchases or assets purchases are meant to provide liquidity into the market, okay, which is meant to help the economy in its recovery. Okay, now if they actually slow it down, that means they will end up putting in less effort to aid in the economic recovery of the country. Okay, this is actually good, right? I mean, if you have, like, an arsenal of firepower, and then you just decide to use everything, okay, but in the end you are only using, like, say for example, half of what you plan to use, is actually it means that economic recovery has been faster than expected. Okay, so that's in short what they did the last time during the previous meeting, okay, to cut down assets purchased from 4.4 billion pounds a week to 3.4 billion pounds a week between the period of May and August. Okay, now, so later on at GMT's 1900 GMT +8, what can we expect from the Bank of England? Okay, now for sure they're going to hold their interest rate unchanged as usual, okay, at 0.1%. Okay, the thing is, since the previous meeting, okay, inflation and business activities data has been very positive. All right, let me show you what I mean by that. So, okay, first thing, I think it was last Wednesday, okay, that the CPI data for the UK, okay, release, it actually printed 2.1%, okay, year on year. Now, 2.1% is actually it actually falls within the central bank's inflation target range of 2 to 3%. So this is good news, okay? So I think during the previous release, it was around 1.5%, okay? And we actually see an increase to 2.1% this time around. So, you know, it's good that we see this kind of data, okay? Now, second, I think it was yesterday. Yeah, it was yesterday, correct. Yesterday, we also see the pound, the UK PMI data releases, okay, for the month of June. Now, there's a P over here. It means preliminary. So, you know, June hasn't ended yet, but the IHS market, they actually have a so-called like a preliminary release, you know, an early release of, you know, what we are expecting the business activities in both the manufacturing and the services sector to be, okay? And as you can see, there is continued expansion in both the manufacturing and the services sector, okay? In fact, yeah, for the manufacturing sector, it's actually better than expected. I mean, okay. While the services sector, there's actually slight decline, okay, from the forecasted figure and the previous figure, okay. Nonetheless, 60, you know, above 60 for PMI is really very strong. Are very strong numbers, I would say. Okay, back in normal times, like before the pandemic were to hit, you know, we usually see like monthly PMIs of 50 to 59. Okay, normally ranging around like 54 to 56, I would say. Okay, now 60 in this kind of period is considered very strong, okay? And it actually shows that business activities are coming back, okay? Now, so with these data, okay, strong inflation and strong business activities coming out from the manufacturing and services sector, okay, it will actually contribute to the central bank's view of the economy, okay? So now you might be wondering, okay, so we actually have quite a positive data coming out, okay? So, will we be seeing a QE tapering, or maybe a talking about QE tapering this time around? Okay, personally, this is my view. Unlikely. Okay, unlikely. Why is that the case? Yes, we have good data, but you might want to pay attention to the recent extension of the COVID lockdown, okay, from the UK, okay, announced by Boris Johnson. So there was a recent spike in cases, okay, due to I think it's the Delta variant or something like that, okay, or whatever it's called. So with that, you know, Boris Johnson, the Prime Minister of UK, decided to extend, delay the easing of lockdown measures to 19th of July. Okay, so because of this, the central bank, the Bank of England, may actually want to, you know, just put everything on hold, just adopt we just watch and see how things turns out over the summer, okay, when the lockdown measures are being eased fully, and probably like wait for a month or so and see how the economy were to adopt this new decision before making a further decision on whether, you know, to carry out a tapering in quantitative easing, okay? So chances are they will be waiting, okay, adopt a wait and see approach, at least until 19th of July, okay? That's one thing. Now, the next meeting will be held on 5th of August, okay? What's so crucial about next meeting is that the quarterly monetary policy report, which comes with the central bank's economic projections, will also be released, okay, during that meeting. Now, this is another reason why I say that, you know, the central bank may want to adopt a wait and see approach and delay their, you know, any major decisions on QE tapering until August, because that is when they will actually be releasing their projections. Now, hopefully, okay, if the UK were to ease their lockdown measures, on 19th of July, okay, then from then until August, we have like a half month or so, okay, we will be seeing more economic data releases, okay. If the data were to turn out positive as well, like this month or the previous month, then for sure it will be contributing to the central bank's view of the economy, okay. Specifically, they will be more optimistic in the recovery. Now, that is when we may want to, pay more attention to whether they will be, talking about, carrying out policy talks to ease tapering. No, that doesn't make sense. To taper quantitative easing. That's what I'm trying to say. Okay. So this meeting later on tonight, unlikely it's going to happen, but just pay attention to it in case they may actually drop a hint or two. But I would personally pay more attention to the 5th of August meeting due to the release of the projections, economic projections. And that is when the lockdown measures are supposedly eased, hopefully, okay, by then. So nonetheless, okay, still pay attention to what the central bank has to say in the rate statement tonight. And if they actually drop any major hints or anything like that, come back to the call tomorrow and, I'll update you guys on it. All right. With that, I'll pass it back to Jinwei.
Okay, thanks for that, Kim Hong. Very comprehensive approach to tonight's news event. All right, so right now it's Thursday. Thursday right now, our currency in focus is yen and gold. So right now I'm going to pass the time to Scott Andrews, Forex Case Australia, to share a little bit about the yen and gold. Scott.
All right, thank you very much. And thanks, Kim Hong, as well for your insights too. So look, the pound is definitely the key talking point against the Japanese yen. But firstly, I just want to talk about the USD yen. So, what we do have here is what I like to see is something to pay attention to. We have seen the US dollar break out of previous resistance, and it is holding above 110.80, and it's now acting as support. So my thoughts here, number one, the US dollar obviously did rally, and we've seen it pull back a little bit, but it has found, a little bit of a bottom, and it rallied a little bit as well. So what my thought process is here is that I am paying attention to the upcoming news as well. So we've got the technicals in play, and it's long bias, but I just want to briefly bring up the upcoming news as well for the US dollar, because there are a few things that are going on as well. So what I'll do, I'll just bring up the calendar here, thanks to Forex Trading Asia. So what we've got here, we've got Thursday, the 24th. So Kim Hong went through obviously the pound news to pay attention to, and he did that in great detail. So I won't go into that, but we've got the GDP quarter on quarter for the US, and that's coming out at 2030 GMT plus 8. And it's going to be interesting to see what that does in regards to, if it does beat expectations at 6.4%. We saw the previous quarter, it was 6.4% as well. So I'll be paying attention to that. So what that means is obviously it's, in the morning here in my time zone. So I won't be jumping in to a trade straight away. And also we've got the initial jobless claims as well. So if we recall, Jerome Powell did testify very early yesterday morning for our time zone. It was the afternoon, obviously, in the States. And there are still issues with individuals returning to the workforce, and there are a few issues there that are present. There's still concerns about COVID as well. And Jerome also mentioned that, some people are just trying to get the best job they possibly can, and they're being a little bit more picky, which is fair enough. So we are seeing a lag there still in return to full employment as well, and workforce participation. So if we see that, it was 380 previously, 412 previously. 380 is the forecast. If we do see less than that, that is a good sign, because people are claiming less for jobless claims. So that's a good sign. So I'll be paying attention to that as well. So what I'll do, I just want to quickly go back now to the chart here. So as you can see, I know some people are fully fundamental, fully technical. what we do here is we like to pay attention to both as well. So the trade idea specifically would be a conservative approach would be, I'd like to see it just come back down again. We've got obviously 110.80 as the support level. So I need to see it come back around 15 pips. So ideally around even a 110.90 as an entry. I'm not too fussy. I'm not too greedy on getting the best price possible, but something around that support zone would be great. And then my target would be, now again, it's up to you, but I mean, I don't mind holding positions for a little bit longer, but really, if we're risking, let's say 20 pips, I want to make at least 40 pips. So we'd be targeting around 111.40, which is around here, as just an idea. And then the stop loss, if we're going for 110.90 as the entry, I want to sort of, you know, the breathing room is essential. You don't want to be too tight, but you don't want to be too, you know, wide, because what will happen is the trade could just end up doing not much and you're just sitting in, you know, drawdown for quite a while. So I'd like to go for, if we've got a 110.90 entry, you know, aggressive is a 70, 110.70, but if you're a little more conservative, 110.60 for 30 pips. So 20 to 30 pips. I don't like going more than 30. The reason for that is once it moves up around 20 pips, I'm going to go stop loss to break even there, guys. So that's my thought on the USD yen. So I'll go now to, I think really this is probably the one to focus on. It's the pound yen. And hasn't 155 been a point of just stubbornness? We've got let's go to the daily time frame here. I mean, look at this. It's just been floating around, lots of tests, and it really tells quite a story of just frustration here. But, you know, with what Kim Hong has mentioned with the pound, that's really been the currency pair that's strengthening. Now, the factor of concern is we've got COVID-19 variant with the Delta strain, and that seems to be causing some concern. Even in Australia here, we've got the spread is just way easier than COVID-19. The current strain, this new Delta strain, is, you know, somewhat of a concern. But if we go down the 4-hour time frame, now it is testing it right now, and we've got a little bit of time. We've got around 8 hours until that release for the Bank of England. So my thought process here is that if we see after the release, now please pay attention, if you don't want to get in immediately at the release if you don't really know what you're doing in risk management terms, but, you know, wait a little bit of time, that may be 20 minutes or so, for price to stabilize, because you're going to have, especially in the lower time frames, wicks either side. So my thought is really to be a little conservative. I want to see price break out. It's pretty good news. Let it settle. Ideally, it comes back down. Now, it's not going to be an exact science, but the closer to 155, the better. And if you're watching this, obviously, live later today, close to 155, let's say 155.10 as an entry. Again, you want to wait for the price action to rebound, though. So you want a wick like this, a wick to go, take the stops out that are already in play. These guys have got in too early. Then wait for the candle to start turning, even the hourly candle. So at 8 o'clock in the evening, GMT plus 8, that candle closes, see where it is, have the stop. Now, with the pound yen, it can move a little bit around this 155 area. So my thought would be, would say 155.10 as a hypothetical entry, and then I'll give it to 80. So 154.80, we've got 30 pips. And then if we go to the daily time frame, we can see we've got 156 as the next zone. But now, as you can see, there's been a lot of congestion getting through there, though. But if we're going, we want to go at least to 2 to 1. So we're risking 30 pips. I'd say 155.60 as the take profit, which might need a bit of time, but as soon as it moves around 20 pips in your favor, I'm going to the stop loss to break even. So once we get to around 155.30, stop loss to break even, and just let it be. But I mean, it really has been wanting to get out of this range. And like Kim Hong said, if there is mention of further easing, then that's a great trigger and a great catalyst. If not, wait to the next meeting. And, you know, if you really want to get in, if it looks like it's breaking out, really reduce your size a little bit. Now, what we'll go to next, and just to wrap up, will be the Euro Yen. All right, so Euro Yen is a little interesting. It's not as exciting as the Pound Yen. And what I want to do just briefly is bring up just the Japanese news to pay attention to. So we've got, you know, there's not a huge amount. We've got Thursday here. We've got on Friday, we've got the Tokyo Core CPI. So that could be an interesting thing. We've also got the Tokyo X Food and Energy month on month. Again, there's nothing super high impact. So what I look for then is anything really key coming out for the euro. We had the Lagarde speech as well, which wasn't that impactful. I actually am still long the euro US dollar, and we saw the euro sort of cool off a little bit. Now, what I want to look for is, honestly, I'm a little more short biased here. So this is not an immediate trade that's coming up, but you know, when it's floating around between two levels, I want to see it come back up again, because there's a lot of room on the downside. So you're going to be waiting a long time for it to come back down to test that. So I want to wait. We've got around, it's 132.80. So we're at 132.35. So that's around 45 pips. And then if it does break and turn over, then that's a sell opportunity. But really on the euro yen, there's not an immediate trade idea. So my main focus is the pound yen and also the USD yen as well. So those are the key trade ideas that I've got on the Japanese yen pairs, guys.
Hey Scott, you got anything to share for the gold?
Gold, I do.
Yeah.
I was wondering as I closed that. Let's go and have a look. Now, gold isn't something we do trade much, but I think it was definitely a really great sell for anyone that did take it on the downside. Now, I'll just get this up here. We've got, if it does come back down to 1,755, then which is around, we're currently at 74, so it's around 20 pips to come back down again. We'll see if it wants to retest this. It definitely seems to have found some stability with the US dollar pretty flat last night, and then it's, you know, minus strength today. If we get, you know, a GDP number that is elevated above forecast, we could see that, you know, cause the US dollar to strengthen a little bit, and then we could see some more downside. But honestly, with gold, it's a bit confused because we have higher inflation, but it's inflation compared from 2020 when we were in the middle of a huge pandemic to now. It's obviously going to be inflated, I see. So for gold, if you really want a gold trade, you're going to have to wait for it to come back down here, because you've seen that it can rally from a technical standpoint. So yeah, 20 pips to 175, 1,755, and then just wait to see if it gives a bit of a bullish price action print is my thoughts on gold.
Right, thanks for that, Scott. Yeah, so with the trade ideas, just a reminder again, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. Okay, next I'll pass the time to Daniel here. Daniel did some group coaching for the LCMS Traders Club yesterday night, and I believe he has some trade ideas to share. Daniel.
Okay, thanks, Jinwei. Thank you very much. So yes, indeed, yesterday night we had a live trading sessions. So some of you may ask, why is this live trading session? Basically, it is about the coaches coming together with the members in, and we look at what is the market at that point of time. So we based on 5-star analysis, what's the news, what's going to happen, what could we be preparing for, and then straight away get ahead and how to prepare and trade for that night. Okay, so it's really this started because really got a lot of people asking that I don't have time to trade, no trades to take, no time to prepare, and I can't take any trade at all. But really, we will show you, and we are trading together as a community. We were 1 hour, 1 hour and a half, working profitable trades together. So now, what did we review yesterday? Right, yesterday 8 to 9, we had a lot of preparation. Market wasn't really moving, so we actually prepare some possible targets and price entries and targets, right? And for that, and of course, then I stayed a little bit beyond 9 o'clock for the US Open coming in, and straight away the movements came in. Really very nice. So let me share a few trade ideas that we had yesterday. Now, one of the trade ideas we have was the New Zealand USD. And because yesterday night, at a shorter time frame, at a 15-minute chart, we were looking at just going to break above, following the trend, moving up. You can see if I zoom out, even on a 15-minute chart, it has retested the support level and pushing all the way up. So we look at 0.7050. We're waiting patiently for it to break close above that, and it did that, moving all the way up. As a short-term trading for that night, a little bit more like day trading, we were looking at about targeting about 10 to 15 pips of take profit targets, very very tight. So you can see it breaks above here, it went about 10 pips up. If you take a break here, it's about 1 to 1. Day trading about 110 pips to 10 pips take profit targets, really very nice coming in. However, if you want to continue to hold, we will still see a possible New Zealand USD moving up. However, today, as I mentioned yesterday, today we have a GDP number right after the BOE news, monetary policy. So we have to be very, very careful if you were looking for a US trade then again. So this one we were looking at on the spot for that night, what kind of trades to be going in, what trades going out. A New Zealand USD buy trade at that time, we were waiting patiently for it to be happening. And the other one we look at, it didn't break out very nicely, was the Euro Yen. It was going up, pushing that night, really moving out up, and we decided that it is in this reactionary zone, what we call it, the intermediate reaction zones here. So really very nice. We look at it as close above 132.7, just to break above this zone, reactive zones here, intermediate resistance level to take a trade. It didn't do that, so it really prevented us from taking an unnecessary trade and taking a fail, where you don't like when it takes a trade and then it moves back against you. And this is how we prepare for live trading sessions as well. The other trade, I have met a few others as well, but the one more maybe I'll share with you was the US Swiss. The US Swiss coming in at that point of time was consolidating at 0.9168. Really very nice trade. We were looking at it because you can see it has again reacted that level here, almost as acting as a support zone, reacting at that point of time at before 9 o'clock. We were looking at this trade from 8 to 9, waiting it patiently, a setup coming in, and then at 9, after 9, about 9:30, it actually pushed down, and that's where you could be looking for a trade. Breaking down here, I remember we said about 20 pips, we could look for maybe about 15 to 20 pips stop loss, and going for 15 to 10 pips of take profit target. And you can see in this, usually what we learn in 5 steps in the LCMS Traders Club community, with this big shoot of the candle coming in here and outside Bollinger Band, this is the point where you do a day trading. This is a point where you want to exit out and secure your profits. So yesterday is really very nice. We look together, prepare setups and trade together, coming into for a day trading that night. A few profitable trades as well. So I hope you guys can join us at LCMS Traders Club. The link will be pasted up in the chat group right now. It is lcms.com.sg. Join us. It is really very worth it. We're a community coming in together, trading together, and understanding the forex market together. So I hope to see you guys then. Bye.
Okay, thanks for that, Daniel. Yep, I've just pasted some links in the chat. If you want free signals from the Forex Trading Asia Telegram group, to click on that link. To subscribe to the YouTube LCMS Traders YouTube channel for the daily recordings. And as Daniel mentioned, if you want to get coached, attend the webinars, get faster signals, to check out tradersclub.lcms.com.sg. And if you are looking for someone to manage your trading account, check out forexbriefcase.com. All right, so we have come to the end of the session today. We will see everybody tomorrow for the Canadian dollar and cryptocurrencies. Thank you so much. Bye.